Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options, and I'll be facilitating this session tonight with Rob Roy. I'll introduce Rob here in just a few moments, but as always, we need to cover off some important housekeeping details about the session. If you've attended any of our live sessions previously, whether it might be a TradeFinder Live or Insiders meeting, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website if you'd like to read it in full detail there. Certainly feel free to take a screenshot of it if you like, but that's the main point to take away. All right, so for this session, we are live streaming to multiple platforms as always. We actually just added another one, with that being Twitch. So we are widespread throughout YouTube, Twitter, Facebook, Zoom, and then of course Twitch as well. So we'll be funneling questions in towards the end of the session once Rob goes through his presentation, goes through some case study considerations, and then answers questions with the remaining time. So at any point throughout the session, please feel encouraged to write your question in whichever chat window is available to you or into the Q&A window. And if time allows, I'll be able to pass it through to Rob. Again, just make note that if we don't get to your question, it has nothing to do with the validity. We just only have so much time for this session. And with us live streaming to multiple different platforms, we're going to try to get a few in from each of those different platforms. So again, if we don't get to your question, definitely take that as encouragement to attend the Insiders meeting when there's a 45-minute portion solely based on answering questions for our subscribers. So obviously a much higher likelihood of getting your question addressed there. Lastly, any support-related queries I can handle in the chat, so definitely feel encouraged to write anything along those lines in there. And one final note for the chat window, it does default to hosts and panelists. So if you would like everyone on the webinar to see your message, be sure to change the "to" to everyone, and that way it'll be visible for everyone on the webinar. All right, well, market was up yesterday, back down today, kind of just treading water, waiting on this Fed announcement tomorrow. So interested to, as we all are, see what happens with that and hear Rob's thoughts. Bitcoin currently trading in the 18. So I know Rob will be bringing up that chart here in a bit. Look forward to hearing his thoughts and insight there and interacting with you all. So thank you for taking the time to join us live. And I'll introduce who we're all here for at this moment in time. That's Rob Roy.
Thanks, Zach, and welcome everyone on the 9 million different live streaming social media services that Zach mentioned. I think I'm too old school to keep up with all the different social media platforms that are out there and live streaming services. But welcome to all of you, regardless on what platform you might be viewing us on. Zach gave you a brief rundown. Just reiterate it a little bit. We'll talk about the markets. We'll talk about international markets as well. Please don't tune out when we talk about the international markets, because every security that we look at is tradable on the U.S. exchanges, and sometimes there's good patterns in other markets exchanges. We'll review case study alerts that we send out to our alert subscribers at EWOtrader.com. And then we'll go through and look at previous case study considerations, which is what we identify here at TradeFinder. And then you're kind of left to manage them on your own from there. We'll see if we can find another one for this evening. And then Jack went through talking about the Q&A with whatever time is left. We'll get to as many questions through the various different platforms as we can. So I don't want to spend too much time reiterating everything Zach said. So let's just get to the charts right away. You can see on the S&P, we are sitting right at that 61.8% C wave extension. Zach talked about how we were up yesterday, back down today, kind of no harm, no foul, just treading water. Pretty much what I thought was going to happen. We're doing the shorts now. Hopefully you're seeing those on Twitter or whatever, where we're sending out a EWO at the close, brief, just minute long, quick update on what's happening in the markets. And that was what I said yesterday I thought would happen today, and it kind of came out exactly that. Nothing significant today, lower than average volume. We do wait the Fed announcement tomorrow, and that's going to be key. 75 basis points is baked in. There's about an 85% chance of that. So when it gets that high, usually the Federal Reserve follows through. Slight chance, I think, is around 20% chance of a 100 basis point rate hike. That might surprise the markets a little bit. Another thing that could happen is if the Federal Reserve said, hey, we're going to do this 75 and then pause, and we're going to wait for some more data before we make any further determinations. I think the market could rally from that scenario. So if either of those two things happen, I think you could see a pretty volatile day. It's usually volatile in the short term, in the 30 minutes after whatever move the market makes right when the Fed makes their announcement. Usually gets retraced a few minutes later, and then we figure things out from there. Sometimes it takes till the next day. One thing I did want to mention today, there was a 20-year bond auction. I know we get real caught up in the 2s and 10s due to the fact that that's what signifies whether we're in a recession, et cetera, or at least that's widely felt that way. And then we talk about the 30-year because that's what mortgages are based on. But they had a 20-year auction today, and it was very heavily subscribed to. If you watch CNBC at all, Rick Santelli at 1 p.m. Eastern time comes on and gives the review, and then he gives it a grade. He gave it an A-. But the key was that there was a huge amount of indirect buying of the 20-year today, and that is just slang terms without getting into too many boring details of foreign entities buying the securities, which I think is really important in my opinion. I do think there's a twofold thing here, which I'll get to in a second, but it's important. If the Federal Reserve is not going to be buying bonds and treasuries because they're not injecting liquidity anymore, somebody better come in and buy them. Otherwise, we're going to have a real hard time financing our debt here in the U.S. So the fact that a lot of foreign countries came in, foreign entities came in and bought those bonds, I think is significant. And then you look at the other side of that coin is, well, they were coming in buying the 20-year. Are rates getting to the point where they would rather lock in rates with bonds and treasuries versus moving it into the equities market? That's the trade-off, right? So I do think we will see something significant tomorrow. I really feel that we need to come down and hit this C wave extension. I'll take the volume chart off. And then I want to look at the VIX. And there's a lot of chatter on the VIX. Some of you have actually sent messages in about what other financial networks, et cetera, are saying about the VIX. I still feel, and it's just my feeling, which means nothing because the market doesn't care what I think. It doesn't care what I feel, nor should you really. We need to trade by what the charts tell us. That's what we do at LA Wave Options. We're technical traders, and we listen to what the market's telling us rather than trading on what we think is going to happen or what we think should happen. I just feel like, and this is going back on experience, that it's hard to say that we've put in a legit bottom, even if we rally in the meantime, but that we've put in a legit bottom without one of those just really ugly cathartic sell-off days with a big spike in the VIX. And I know that's an old school way of thinking. Well, I'm old school. I've been doing this for a long time. I've been around a long time. So there's a lot of old school in me. So, but that's just my feeling, and it could be completely wrong. One thing I can see on the charts, though, which is going to tell us something in the not too distant future, is we have an ascending triangle here on the VIX with that high bumping its head around 28. Is that enough? Is a VIX at 28 enough to put a bottom in? Maybe. We're going to find out. Perhaps we get a big downside breakout. Remember, an ascending triangle does not necessarily mean that the security, in this case the VIX, is going to break to the upside. Any triangle, descending, ascending, or symmetrical, can break in either direction. So this could break down. We could rally. If the Fed says they're going to pause, I think that's what will happen. If they don't say that, if they're still as hawkish as Chairman Powell has been ever since Jackson Hole, almost defiant in some of his speaking, then perhaps we may break to the upside there. But I think the last few days have shown us, based on the fact that not just yesterday and today, but even going back to Friday with the gap down, we've gone sideways since then. We came within a whisker of filling the gap yesterday. So a lot of people can say that, you know, that gap has virtually been filled. Last thing to look at then would be the 10-day moving average. And we're a tiny bit oversold still, even with a sideways move today and a little bit of a rally yesterday. But we're not so significantly oversold that the market couldn't go lower again tomorrow if the Fed disappoints it. I think what's really interesting here is how close this C wave extension, the 100% extension, is to the June lows. So maybe we come down, form a double bottom. Maybe we have a really ugly day tomorrow and the VIX goes to 30 or 35. Then maybe we can rally to the upside from here. I don't know. If you listen to Nouriel Roubini, I think it's Rubini, who's always bearish, says that the market could go down 40% from here, but he's so bearish all the time that you can't really put a whole lot of weight in it. But that's what he said on CNBC today. But you know, you take that with a grain of salt. I'm only mentioning it because if y'all watch the financial networks, I like to comment on what's being put out there and give perhaps a different spin or maybe a further explanation of what's being said. That's my viewpoint of it. That's what the charts are saying. We'll see what happens from there. Big move to the upside on the 10-year on TNX. You would expect that with the buying that came in on the 20-year. Perhaps not as much money went into the 10-year, so rates went higher. A little bit of a gap, so maybe we get a reprieve tomorrow. Tiny bit overbought, if you can say that. Let's just say there's separation from the 10-day moving average on the rates moving to the upside today. And then if we look at the dollar is come down, tested an area where it was likely to test back to the upside. We're still holding the 61.8% wave 5 extension, which, as you know, is a strong fib level. It could hold. It could be the end of it. I think tomorrow the dollar moves on whatever the Fed does, whether that's to the upside or the downside, we'll see. But with a 61.8% wave 5, could that be the end of the move of the dollar? It could. But could the dollar go higher? Yeah, because remember, the zigzag pattern on the dollar has it coming up here to 112. And I think there's a high likelihood that we do hit that 112 level. I'm a big fan of the zigzag patterns, and before we turn and move to the downside. So that's kind of it on our markets. And let's take a look at some of the, or at least on the S&P, let's take a look at some of the other markets and go into the international markets. And you can see here that the Dow has broken below its support level there at 310. And I think that's key. You put the 10-day moving average on. It's kind of the same as far as the look of the charts over the last 3 days, other than the Dow is below 310, where the S&P still sits above 380. So 380 is to 310 on the Dow here. So that's the only difference, and it's not significant. And in fact, the lows on the Dow going back to June aren't that far away. A little bit further away on the S&P than on the Dow. And then you can see that we have a zigzag pattern here too on the Dow. So I'll show you that and give us a potential target. And that would just ever so slightly break below that wave 5 low if we did hit that 100% extension on the diamonds. Let's look at the Qs. Taking a look at the QQQ, you can see that continuing to move down in its own zigzag. Remember, we talked about this move lower here was an impulse move because this wave 5 had completed, and we went back, and that was a perfect 61.8% corrective move. For those of you that are joining us and haven't seen us before, we've shown that. Look at some of our previous videos. Go to our YouTube channel if you haven't visited it, Elliott Wave Options. Post a lot of videos there. But that was a perfect 61.8% corrective move. So you just kind of shut that off. All that's done. And then you look from this point here, which is on the 16th of August. All right, where do we go from here? Well, we started a new impulse down. We had a little bit of a corrective move, and we have a zigzag pattern here on the Qs. And again, the 100% extension. So whether or not we are slightly below the June lows or call it right at the June lows, all those C waves, if they make it to 100% extensions, are all kind of saying double bottom time. We'll see how that plays out. And I think tomorrow is going to give us a good idea on the direction in the near term, at least from a directional standpoint. And so look at the IWM, and we've just hung around this 180 level. It did go up and test 190, couldn't get above it. Interesting that it went right exactly to it. We've been talking about this trading range. In fact, the high was 189.86. That's about as close to 190 as you can get. And then you look down here at the 170 level, which is support. We're right in the middle here. I think it's important to look at the zigzag here on the IWM as well, also with 100% extension. So, I mean, all these markets, a lot of people are saying the markets are a little bit out of whack. You know, from a zigzag standpoint, they're all almost exactly the same. Now, where they are from support resistance is slightly different. Granted, I'll give you that. But they're all in a C wave of the zigzag. They're all right around the 61.8%. They could all go down to 100%. Zach already mentioned where the Bitcoin was at the time of this recording. It is in the 18s. And so here we go again. So we're trying once again to see if we can break below 20. But we did it before, right, with no follow-through day. So can we do it again with the low getting all the way down to 18,250? So that was a lower low than we had back in September 6th and 7th. So here is the support there at 20,000. Now we need to know, and I know those of you that are new, I understand trades 24/7. I got all that. But it does give an end-of-day print for charting services like Profit Source, which is what I use here. I think it's the best Elliott Wave software out there. If you want to learn more about it, go to hubb.com and you can learn more about the Profit Source software. But now the key becomes, do we get a follow-through this time? If we do, I think we're going to 16, and you've probably seen there's a lot of people talking about 12 to 15 as the potential low on Bitcoin. Then you start to get, there's some crazy views like 6, 7, 8 going back down there. I don't know that we go down that low. I just don't feel that, but I do feel 16,000, even as far down as 12,000 could be a possibility. And then we move in, we get the halving done, and likely Bitcoin takes off again. And probably most of the cryptos with it. Ethereum, you know, we talked about its merge. And so it's been moving to the downside and kind of holding in this 1350 range, a little higher, a little lower, but seems to be trying to find a bottom in there. All right, so let's take a look at some of the foreign markets. And if we go to Australia via the EWA, you'll be able to see that still holding 21, which is really key. If it can hold 21, then we got a chance to take another run higher. If we don't, we're coming down here to this level. But see, we're kind of getting towards the end of the window here on the tap box time and price projection. But we do have a zigzag pattern here on the EWA as well. And the 100% extension does get us breaking 21, but it just comes down and tests the low there on July 14th. So similar in the fact that 100% extension kind of puts in that double bottom. Maybe that's what we're destined to. Just double bottom. I'm all in favor. Let's flush it out tomorrow. Let's have a really ugly day tomorrow on the Fed announcement. Let's have a spike in the VIX and get all this done, and then start talking about building a bit of a foundation for a potential move higher. That'd be great. It depends on the Fed and how negative they get. I am in the camp. You've heard me say this before. There's other people with me. I'm not alone on this, that I do feel like the Fed's going to go too far and they're going to put us into a recession. So I don't know if a double bottom can hold in that scenario. Maybe, but we'll have to see how that plays out. We're not even down there yet. When we get down there, we'll see what the charts look like at that point. Take a look at Canada here, really trying to hold this bottom here at 33. Now that looks like their zigzag got disqualified, and no, it didn't actually. But the 100% extension is not too far away. So you get down here and they don't have to go much lower in Canada. So maybe Canada's market hits the low and starts to lead us out sooner. We'll see. I didn't put India in the last update on YouTube, and y'all let me hear about it. But we're trying to show as many different symbols, many different international markets, etc., without creating a 30-minute video, which I know you're all going to watch. So remember, we try to keep time constraints in there. And if your favorite symbol's not there, let me know. But we're going to rotate them around so that we can view everything without taking up too much of your valuable time. We really talk to you a lot as it is. And so looking at India, so impressive, the Indian market here, holding in this area around 43. And I know they're being tough on exporting rice, etc. And so we'll see how that affects their economy. They're worried about inflation there, and so they're being pretty picky on that. So they don't want to lessen their supply, because it's supply demand, right? So they don't want to lessen it. So they're trying to offset future worries about inflation, but they have not had the downward move on inflationary worries that a lot of the other markets have had. So it remains 43 is key. As long as it holds 43, you can stay long the INDA. But if it breaks that, then watch out. And if we can't hold this wave 4 low, if we break below 43 and we don't hold this wave 4 low here, that occurred back on the 26th of August, well, then it's going to get ugly, because that was such a vertical move to the upside. It will be equally as vertical coming back down. That's just how it works. So as long as it holds 43, you don't have to worry about that. But a break below 42.5, and then it's watch out below there. Katie bar the door, as I said, and people are like, well, those of you that are old as me or a little more country understand that expression, but some of you are like, what does that mean? And then looking at Germany, we actually have an alert on Germany for our alert subscribers at EWOtrader.com. Because of this wave 5 to the downside, it is profitable at this time. We're here. We're at the double bottom here on the EWG, where we're waiting on that double bottom for so many of the other markets, including pretty much all of ours here in the US. But we're there on the EWG. Tiny bit oversold on today's move lower. Does that hang in there? Do we go a bit lower from here? A lot's going to be determined. I wouldn't be surprised to see a little bit of a bounce here. You can see last time we came down and tested that level, we had that move higher. Now we're back down here again. Can it hold again? It could easily bounce back to that 10-day moving average in tomorrow's trade. But if we break that low, so there's your Katie bar the door. If we break that low on the 14th of July, I do think we come down into the 19s on the EWG. Not there yet. We have to break this level here at 21. That would be a significant move lower from here. All right, so that covers most of the international markets that we talk about. We do sprinkle in a few from time to time, as I mentioned. I know some of you are asking about the EEM. There's a lot of people that are waiting on the US dollar to break a little bit, and then they think the EEM is going to be a great move to the upside. But right now, so is that going to coincide with the dollar? It's an interesting theory, because look where we are, a 61% wave 5 extension, right in the 61.8%, that strong fib level. So does that mean the dollar's done going up and EEM is done going down? That could be interesting. So keep an eye on that, keep an eye on the dollar, and perhaps this could be a pretty good start to a bounce back to the upside when it's ready. It's oversold right now. It's got a really nice pivot point there. So even a little bit of a bounce here, you have to say, okay, that's an oversold bounce. But we start to break back above those moving averages, then may have something moving to the upside. Right, I did want to show you something really interesting here. This is how the alerts look on our website, EWOtrader.com. Every alert that we send out, we have multiple portfolios. We have the impulse portfolio, which is directionally based. We have the volatility portfolio, which is our strangles in triangle patterns. And then we have our AI-based time strategy, where we're capturing time decay and IV rushes, if you will, capturing those, and then that whole strategy is fully AI based. Well, what we're doing is we're also integrating AI. We're in a beta test area of it now into our impulse. Can you imagine? Just think about this. Can you imagine the power? Elliott wave is so good on its own, and then we get all the bugs and all the little intricacies worked out in enhancing Elliott wave with AI. Can you imagine how great of a system that's going to be? We've had great success with just the beta alerts that are coming out. If you've ever wanted to be a subscriber to our alert service at EWOtrader.com, there's no better time than now. Go to the website and check it out. But here, this was from our, and you can see the entry here. We talked about this. It was based on one of our beta testing AI searches. Now, the interesting thing about this one, it was in a wave 5 to the downside, but we had divergence in the oscillator, and the AI was telling us, hey, we're due for a bounce. So where's that target going to be? Is it going to be all the way back to the wave 4? Well, we were looking for a bounce, and that's exactly what happened. You can see that we got this bounce, so we moved higher here. Now, note where that is, because the forecast was down here around 121 in June. So June 20th was the day on the outside of the tap box. So that was our trade there, 3 straight to the upside. Boom, 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 gave us over a 56% return in 5 days. Now, would you be happy with 56% in 5 days? If not, trading's not for you. I can tell you that. So let's go back. Now, remember those dates. And I want to show you what did happen on Qualcomm. So we took that off in May after that little bit of a move back to the upside. So there it was right here, and it leveled off a bit, and look where we went, right back down to 120, exactly where we were supposed to go. And look where we got there. That's June 16th. What was the date forecast? June 20th. So if you're down in Elliott wave or whatever, and then now we can have little moves within the waves, if we can get corrective moves within the waves, like that little bit of a corrective move to the upside there before we came all the way back down and hit the exact target almost on the exact day. Pretty impressive stuff. We're so excited about the coming year at Elliott Wave Options, EWOtrader.com. So I wanted to share that with you. All right, so now let's take a look at some of our past case studies. We review them all if they're considered to be still open, like if you're watching it to see where it goes. So we keep an eye on those, and if we find an exit point, then we cross it off the list. There's only a handful, and this is Reliance Steel. And I've been talking about this. We had adjusted this to the downside for our alert subscribers, and you can see this move lower. This is one that made no sense to me on why we were hanging around here at 200. It just wasn't following through with the market, and then it finally gave up the ghost. And I've talked about this before. My mentor, when I first started trading, talked about these triple tops, and he called it 3rd time's the charm. And that was whatever happened, if you tested a support resistance level, etc., whatever happened on the 3rd time was the direction that was going to occur for a while after that. So in other words, it hit this level the 3rd time, bounced down again, you expect it to go lower. And that's what happened. So we had a little bit significant move lower here, bounce back up towards the 10-day moving average, and I think we're going to continue to go lower from there. Looking at HZO, now watch this one on this move to the downside here. So we're at 111% extension. You look at the moving averages, and going sideways is what we need to have happen here. Now the question becomes, is it going to bounce or is it going to break lower? If it breaks lower, the next move is easily 25 in a very short period of time. And if you look at the DMI, it looks like, hey, there's more lows to come. But I also like to look at the CCI when we are dealing with downward moves, because downward moves go so fast. Sometimes they get a little bit in front of the DMI, which is one of our favored confirming indicators, but it is a touch lagging. The CCI is far more responsive on a day-to-day basis, and you can see here we have a move to the upside here, and it's creating divergence, and that's one of the things that you look at in the CCI. You look at it in the CMF as well. But notice that as we're continuing to move lower here, the CCI is building upward momentum. And I do think the market needs to, because this is a consumer-based stock, so I do think the market needs to be bottoming or in the process to get a significant bounce here, but it looks like it wants to. And in any sort of a decent market, this could be a great trade back to the upside. Mosaic, kind of like with the market up yesterday, back down today. Look at that doji. Something's going to happen out of Mosaic tomorrow. Just that's such a clean doji. We're going to get a significant move out of it. And then we look at going to August 23rd. We had this strangle here on Love LUV, Southwest Airlines, and you can see that we're all the way down here below 35. So we broke down, came back up, tested it with a doji, and then moved lower from here. And so that's, the midpoint was 39, 38. Now we're down below 35. So you're going to want to take that off if you haven't. Even if it goes lower, don't get greedy. Go ahead and take the gains there. So we're going to cross that one off the list. That was a profitable move and leave it from there. Now, AJRD, look at this one. So it broke lower, not quite enough to take it off, almost, but not quite, because you can see that we're at 44 and the low came down to 42. So it's getting in the neighborhood. Then it rallied back up, and now we're in another triangle formation. So when that happens, and it does happen sometimes, fortunately it doesn't happen a lot, but it does happen sometimes, and you can see that there hasn't been really much movement out of the ADX on either of these moves, whether it moved lower or higher. It basically just formed a larger triangle. So you stay with that one and let that one make its breakout move. And then ABBV, setting up here, and we said if it stayed below 140 and it moved to the upside, but we were already in, and now it's coming back down. So it went up, created the wave 4. It was in a wave 3 to the downside at the time, but we went right to the 38.2% fib level. Well, down here, we're at 140, another doji here. So I think you got a lot of stocks that are anticipating, all right, what's going to happen in the markets tomorrow? We'll see how this plays out tomorrow. A lot of the healthcare stocks have had a rough start to the week after President Biden was on 60 Minutes and said, hey, the pandemic's over. They all were down yesterday. A lot of them down again today. A couple of them were back to the upside today, but it's been a rough start to the week for healthcare in general coming off of that commentary. And then last week we looked at RGLD, and you can see that that one looks like it wants to continue lower, and it has just a little bit. So tiny bit of profit here, another doji. So you can see that everything is waiting on the Fed tomorrow. And I think that's because there's, for the first time in a while, I mean, the Fed has pretty much telegraphed 75 basis points, but there's a tiny hint they may go 100. And then there's a tiny hint that they may say we're going to do 75 and pause. So not big chances, but little chances, enough to where the market's like, all right, I don't want to get in front of that move. I want to see what the Federal Reserve says, what they do, and then we'll go from there. But it does look like RGLD wants to continue, and it's wave 3 lower, very strong DMI there to the downside. You can see the CCI ran up to 0, turned around and went back down. That's usually bearish. And then when you look at CMF, now one thing here is you're getting it's below the 0 line. I know it's red, but that doesn't necessarily mean bearish. If you're a little bit bullish, this is one thing you could look at on gold, is the fact that we're kind of sitting here. We're back down testing those same wave 3 lows, but a little bit of a divergence there. So if we bounce from there, there could be some follow through to the upside, but there also could be, if we break 90, a very quick move all the way down there to 80. So I think that one's going to be really interesting. So tiny bit profitable now. Let's see what happens with it tomorrow. All right. So with that, let's see if we can find a case study consideration for tonight, and then we'll open it up for questions. So taking a look, nothing on the impulse side, which you would imagine with the way things are set right now. So let's see what's on. Yep, there's ABBV, and we looked at that one last week. So let's see if there's anything that looks any good here on the corrective side. Nextera Energy. So we got an energy stock and a financial. That's pretty interesting. So this had a big split. This was one of those high dollar stocks. 3 to 1, I think at least, was the split. And so it's moved to the upside here and hanging around 85. Breaking down here. So this is a tougher one because we're in a really tight trading range. I don't think you can do anything with this right now. If it breaks below 80, then yeah, you got to trade here. It's going to go to at least 75, maybe down to 70. So a break below 80 becomes very interesting to the downside. Just don't think it's there yet. If it can break above 85 somehow, then it's off to the races, because look, we're in clean air. I always use the racing analogy that it's far easier on your engine if you're in a race and you're the lead car, you're getting clean air into your radiator. The further ones back in the pack, they're getting everybody's hot exhaust, little pebbles off the tires, etc. Much harder on the engine to be running in the middle of the pack than it is running out front. So when you break above a major point of resistance and you get in clean air, there's no resistance there. So there's nothing to stop it. It can really take off and run. Everybody covers their shorts, etc. So I think that if we make a note of this, break above 85 looks really good to the upside. A break below 80 looks really good to the downside. But right now, ever since July, we've just been beating back and forth, just staying in that tight trading range, ping-ponging back and forth. So I don't think there's anything we can do with that right now. Certainly would be worth keeping an eye on, though. Now the financials, Fidelity National Financial, man, not a whole lot going on here either. We did have a nice wave 5 extension. We're pretty much back to the wave 4, so that's done what it's supposed to do. Another one that's sitting on a ton of support here. So if we did break below 39, then you got a great trade, because we're probably going to come test those lows all the way down to 35. That would be awesome. But if we bounce from here, we're probably going to come up and test these levels, but it's not a whole lot of room, a little bit. But if we bounce from here, perhaps we go and test those highs, and then we see where things go from there. So another one, just like NEP, same scenario here. Tough to make a trade right now. Just slightly different, where on NEP you'd want it to break resistance. On this FNF Fidelity, if we bounce from here, you'd want it to bounce up to resistance and then see, because I don't think it's just going to blow right through that wave 5 high. I think it'll need a little energy, and the CCI is totally non-committal right here. So this is just another one that you have to wait and see. So the problem with now, because there's plenty of consolidating stocks, like 91 of them, is the fact that the VIX is up at 27, and I don't like doing strangles when the VIX is above 25, and we've been kind of in that range. We've come below it a little bit, but we've been trading up there so often. It's hard to put on a strangle there, but let's see if maybe we can find one. Let's see if there's one. There's 221 stocks in bearish wave 3s. None are consolidating, so that didn't work. Let's see if there's any in a bullish wave 3. Supernus, is that how I pronounce it? Supernus? Anyway, pharmaceutical. Yeah, didn't really feel the pain of most of the healthcare stocks yesterday. And you can see that this could almost be a strangle. Worth putting on is what I'm trying to say. I know I just said that I don't like to do it when the VIX is above 25, but man, that looks good. The way the ADX is diving down there, and such a tight as a small triangle is really the only negative here, is it's not very big. So where the highs at just above 36, and 33 is clearly where the bottom is. And you want a 10% potential breakout move. In other words, you measure from the high in the mouth of the triangle to the low in the mouth of the triangle. That's the expected move. We gear it towards 80% of that just to be a little more frugal, a little more cautious on it. But very high percentage of the time, it does move that exact amount from the mouth of the triangle. But we want that to be 10% of where the point is. So if the point's at 35, we need a 3.5 point move, and we don't have that. From 33 to 36 is 3 points. I know it's close, but you really want that 10% expected breakout so that your strangle can generate a decent enough gain to make it worthwhile. You've got time decay, etc., with buying a call and buying a put in the same strategy. So I really like it. I think it's going to move. I think you're going to get the breakout. Just don't know if it's going to be enough to make the strangle profitable enough for the risk in putting it on. So it's just below that 10% rule. So we would already be kind of hedging by putting on a strangle when the VIX is above 25. And then we're going to put it on when we don't even have a 10% move. That doesn't make sense. So we can't do that. So it was interesting anyway. And now we have all these, it's a pretty good time to be putting on a strangle with the Fed. You've got up until 2 o'clock tomorrow to put one of these on. I would imagine that we're going to have a quiet day before the Fed announcement. Who knows? I just can't imagine the market doing a whole lot before then, but we'll see. Auto, home, ATHM. Look how low that ADX is. It's down to 8. Holy cow. Really large descending triangle here. So now this is a whole different scenario here. So you're at 33 of support. Your high is up at 41, almost 42. So let's just call it 41. That's an 8-point difference. It's a $33 stock. We're still only looking for a little bit over a $3 move, and you got twice that. You got over a 20% forecast move here, and you've got an extremely low ADX. It looks like this wants to do something. So then you want to go back and say, hey, do we have a stock that can move in the past? I would say that's a resounding yes on that. Let's see what the options are. Not too familiar with the options on this. Let's see if it's liquid enough, because we may just go ahead and do this anyway, even because with that ADX that low. That would be one where we might consider violating that. What market was that on? NYSE. So taking a look here. Not a lot. That's what I was afraid of, because I'm not super familiar with this one. November would be good. It's not awful. We could make that work. Yeah, the spreads aren't that bad. All right, so that's going to be our case study consideration for this week. So on 9/20, we're going to do another strangle. I think that makes sense. ATHM, not in love with the fact that the VIX is at 27, but with an ADX at 8, and the fact that we have a 20% forecast move, we can offset a little bit of a drop in IV with that big of a forecasted move. All right, so with that, Zach, kind of right on time here, even 2 minutes early. Let's open it up to some questions.
Sounds great. Yes, well done, sir. On being punctual a minute before, so everyone's going to be happy with that extra time, I would say. Tons of great questions and comments coming in on all of our platforms, as always. So we'll start out with this first one here from YouTube, from Alex. Apple is 7% of the SPY. There's a gap at 132, hence 16% below. Can SPY capitulate without Apple? Thoughts?
I don't think so. Apple is one of the big drivers. Tesla has become one too. just because of the sheer size of the market cap. And so can we capitulate without a move lower in Apple? I don't think so. It's a very good question. We did hold 150 here. I think the last time we looked at this, last week or 2 weeks ago, we talked about how important 150 was. So it's held for now. And it has been a little bit, at least a little contrarian to the market today, at least. So I don't think, can we ease lower in the SPY and have Apple move higher? Yeah, but can we put in that cathartic bottom without Apple following along? I don't think so. And so that would mean Apple probably coming back down towards this 140 area. I don't think it has to come down and retest 130. I don't think it needs to go back to this June lows, but I think it would have to break 150 to really put in that kind of a bottom that I'm talking about. But right now, it held 150. It's in a 5-wave impulse pattern to the upside. It is hitting all the major moving averages, though, so there's resistance there. You can see it hit them on the high, backed off just a little bit into the close. But boy, if you want a long trade on any sort of market rally or calm in the market, depending on what the Fed does, and Apple gets above 160, that's a fantastic trade, because I think it takes off and runs like crazy if the market calms down and it can get above 160. It's not going to do that if the market continues lower. But yeah, if we get that big, ugly sell-off in the market that I've been talking about, I think Apple sees 140. But boy, if you're looking for a long and you're itching to pull the trigger on something to get in front of something, a break above 160 looks awfully good on Apple. Got to do it first, but it could be a good one.
Yes, indeed. No question there. So we've had a lot of chatter on both YouTube and Zoom about Tesla. Jeff from Zoom especially is looking at a vertical bull spread.
A bull put spread?
It says vertical bull spread from Jeff.
Oh, okay. So I would assume that to be a debit spread then. So I think the whole spread idea is great. We've been talking to our subscribers about this. It seems like the days of buying calls and puts is over with. Perhaps the whole meme phenomenon when everybody was buying calls and puts when they moved from, the penny stocks into options gave the market makers a new lease on life, if you will, and they've been just fooling around with pricing and implied volatilities on calls and puts since then. So I really like your idea of putting a spread on. So kudos to you for that. And then if we come down and look at this breakout here in this triangle, the C wave extension is right up at 340. Any sort of a just halfway decent market, if we don't get that cathartic sell-off, I think Tesla easily goes to that 340 level. It may anyway. It may just have a down day on the ugly, sell-off day. But you can clearly see that its chart is not following along with what the market is doing. It's the complete opposite. And so is it a market leader? Is it ahead of the market? May very well be. So if you were of the inclination to be aggressive, you could just go long now and put your long debit spread on now, and then if it moves back down, you could always take the short off. That's one of the beauties of having a spread as well, because it gives you some flexibility. Because you're buying a call and you're selling a call. So if the stock comes back down, the call leg that you're selling is actually gaining value, right? You'll be able to buy that back for less than you initially sold it for in the spread. So it does give you some flexibility and protection there, in addition to lowering the cost and offsetting the IV games that the market makers have been playing. So I really like that. And if you wanted to be a touch more conservative, you just wait a little bit and let it break this wave 3 high. And so that high is at 314. So what was the high today? Awfully close. 313.33. So a more cautious approach would be let it break that wave 3 high and then enter. An aggressive one would be put it on now, knowing that if you do put that spread on, you have some flexibility by being able to take off the short call if it were to bounce it down a little bit. So I like it. I like it a lot. It's a good looking trade. Great looking chart too. when you have a wave 5 and you got a big zigzag like that, can't ask for a whole lot more than that.
It's always a fun chart to look at.
Yeah.
We looked at Apple and Tesla. Might as well look at Google now, as Harry and Gary would both like from YouTube for that analyzation.
All right. Let's take a look at the Goog, as we used to call it. And I'm a little surprised on Google that we broke this level. I wasn't surprised that we came down and tested it, especially after that. It's always on my screen. There's a handful of stocks that are on my screen every single day, regardless of what's going on, and Google's one of them. You may have heard me, for those of you that are newer, in my trading career, I've put more option trades based on Elliott Wave on Google than any other stock, and it's not even close. It just really nails, or Elliott Wave really nails Google. Maybe it's the liquidity, whatever, but it's by far number one as far as the number of option trades I've put on a stock following the Elliott Wave pattern. So you can see we're in a wave 3. And so I was surprised it broke 105. It didn't even really try to hang there. See, we got down here, we're oversold on this bar down here on the 13th. So they, all right, we're going to bounce back up, probably close that gap at 110 and then see what happens. No, Google had other ideas, straight down, right through 105, had maybe held there for a day. But we didn't go back to 110. We didn't fill that gap, and we've continued lower. And the DMI looks like Google's not done yet. The CCI is not at an extreme point low, but it is hovering in the lower quadrant there. So could it go lower on the CCI? Yeah, it could. And then a little tiny bit of divergence here. You kind of want to see more than this. On our website, we do have a session on every one of our confirming indicators, an entire hour talking about each one of the indicators, how they work, their intricacies, etc. So that's in the education area on our website, because we're not just an alert service. We actually pride ourselves in our education. I think it's second to none out there. So if you're looking to learn more, whether it's about Elliott Wave options, etc., we've got the information for you, and it's put together really well. But a tiny bit of divergence here. You'd like to see it last a little bit longer than that, but it's starting. So remember, with a wave 3, the negative or the concern is, when does the wave 4 start? So if we go back and look at this big zigzag here, we had a little bit of a bounce there. So we had a complex A wave here. And then, yeah, we're right there. So we're right on the 61.8% extension here, which when you have a 38.2% roughly B wave correction, that's what you're looking for. So basically this zigzag has done everything it's supposed to do. It could be done. But when we get here, oftentimes, and our subscribers are aware of this, oftentimes a C wave will extend down to the 100% level. It doesn't have to. It's followed the guidelines, the rules. It's done what it was supposed to do, which was go to 61.8. But oftentimes they do. And look where that 100% extension happens to be, right smack in that wave 5 forecast. So when you see that, you do kind of want to look at the other indicators and see what they're showing. And, you know, it looks like that we do want to break that. So any sort of a short-term bounce, if you got above 105, with that being such a strong point of support, I'd be a little concerned that it's going to go up to 110. But from there, other than that, other than breaking above 105, it looks like a good short down to 95 to me.
Sure does. Thanks, Rob. Next up, we have Yoke or Yoke. If Fed causes a relief rally, where do you see a great short opportunity, and where would be your stop loss for the S&P 500? 39.25 for short entry.
Well, there's a good short right there for one. And then looking at the S&P, you know, the 100% extension here is right at 370. So if we break that, I mean, as hard as it would be to fathom, but if the Fed is super hawkish and they're intent on throwing us into a significant recession, we're already in one, but it's a little more on the mild side. But if they're going to deepen it, I know there's all that argument, are we or are we not? But I go by that, you know, 2 quarters in a row of negative GDP, That's my definition of a recession. So we did have that. So I still feel like we're in one. It is nice that oil prices are backing off a bit. That's helpful, especially when you're at the gas pump. But as far as the question was asked, where's the bottom on the S&P? Well, the first stop would be 370. If we break that, and we're going to break this June low, which I think if we break this 100%, if we break 370, I do think we break that June low, and then 340 is where we could wind up. We're a long way from that, and a lot of things would have to happen, but that's a possibility. I think 370 is pretty likely, unless the Federal Reserve says they're pausing tomorrow. If they say they're going to pause, all bets are off. The market will rally on that. Feel pretty strongly on that. But if they don't say that and they're real hawkish, we're probably coming to 370. If we break that, the question was asked, where's the ultimate bottom? It could see 340.
Sure could. We will certainly find out tomorrow, as that'll have a major impact. Next up, we have AP from YouTube. CVNA analysis, please.
CVNA. Carvana. I've actually seen some of those trucks around. So somebody's using it, but holy cow. Now that's an ugly chart. Carvana was at 380 in August of 2021. Of course, that's when the market was flush with liquidity. Look how ugly that's been since then. Just a free fall in April and May of this year. Now look what we have. Now we have it. I'm glad you asked about this one, because this is a huge triangle, and it's a really nice looking one. We also have a zigzag in the triangle. And so this is where we always talk about, don't get caught up in picking on the doji right there. This is classic stuff. Don't get caught up in picking a direction on a triangle. And with a downward zigzag, it's really tempting to say, hey, we're going lower. We do have support down there around 20. The 100% extension would be a little bit of a break of that level. That could happen on one of those cathartic sell-off days. But let's say the market, the Fed pauses, the market rallies, money is going to look for oversold stocks. That's where the rotation will be. This one is certainly sold significantly from 380 down to 20 in not that long of a time frame. It's just been ugly selling. So if we break out of this 30, we're probably coming to 20. If we break higher, we might be able to go back and retest 50. I'm not sure. But I like that triangle. Let's see where the ADX is. Yeah, it's coming down. Whoops. It's not quite there yet, but it's coming down there. And to get it, yeah, it's almost to 15, and that's where you want it to be with a 25 ISO. I like that for a strangle, because it's 10 points on a $30 stock. That's huge, and you could get 10 or 20 on an upside breakout. So, and the stock has volatility. Look, it moved 8% one day, 15% the next, moved 23% in 2 days. Yeah, like that. So I like that one for a strangle.
Absolutely. Yeah, no, like you said, that's certainly classic. And Will just said, looks like a meme chart lately. And I have to agree. That is,
yeah, it really does.
quite an ugly chart.
Good analogy.
Lots of potential. So we'll go back over to Zoom here. Nicholas says, HQY chart looks great, but is healthcare a buy now?
Is there enough washout? I don't know. In general, this is a great looking chart, though. If the Federal Reserve is hawkish tomorrow, then I think healthcare is a buy, because it's always going to be viewed as being defensive, right? So you could make an argument that you have a huge ascending triangle here. You could follow along with my mentor's rule on a triple top, because that's where we are. So I think really the prudent thing to do here is wait. you're right there. You're right. There's no reason to rush a trade here. If you're in the trade, stay with it, regardless of your direction. And the ADX is too high for a strangle on this one, so I wouldn't do that. But if it breaks higher, it's going to 85. So that's a 15-point move to test the high. So it's got pretty clear sailing up to 85. And if it breaks lower, it's coming down to 55. And so, going by that rule, whatever happens on the third test is what the direction is going to be. So if it breaks higher from here, then you go long. If it breaks lower, you go short. Really good looking one to keep an eye on, because you got 15 points either way. That's a big potential return. 20% out of the stock and exponential returns on the option. So yeah, that's another good looking one. Keep an eye on that one. I'm actually going to put that one on my watch list too, just to keep an eye and see which way it goes. I don't think you want to guess with that ADX that high. Just let it make its move. You have plenty of room to make a nice profitable trade on that, regardless of what it does.
Agreed. Yeah, good spot there, Nicholas. Next up, we have Gus from Zoom. Elliott Wave set up for NTR, please. Thank you, and hope everything is doing better for you and the family. So thank you for those kind words there, Gus. And just wanted to also make note that we're all appreciative of you still getting through this presentation, given the pain you're in at the moment. So I see we're a minute after the hour. So as always, you just let me know when you're ready to wrap things up.
Okay. Yeah, thanks for the comments. A lot of healing going on, both mentally and physically, with everything that's been occurring. So thank you for the comments. So I forgot the stock symbol. What were we?
Oh yeah, sorry. No, that was my fault. I was rambling on there. NTR.
Nutrient. Here's another one that's right. You guys are all over these stocks that are about to make big moves. So I don't know about the ADS. Thought it's a little bit too high. Same thing here though. 90 is really important. It's support resistance, and you got all three major moving averages there. I would watch this one too and figure out which way it goes. It isn't a 5-wave impulse pattern to the downside, but when you have these consolidations, I think you just let them make their move. If it goes up, it'll have a little bit of trouble at 100 just because that's been resistance before, but it's broken it. I think if it breaks higher from here, it likely tests those highs at 115. But if it can't hold 90, you're all the way down to 70. So another one. Watch what happens from here. Watch what happens from 90. If it breaks higher, you got at least 100, if not 110. If you breaks lower, it's easily coming down to 70. That's a no-brainer. That'll happen rather quickly. So another good one to look at. Oh, like you guys are on top of it tonight. One more, Zach. We'll do one more.
One more sounds great. Well, we've had a couple requests come in from both Zoom and YouTube here for Microsoft and Amazon. So I'll let you pick between those two. Seems like a good trend to stay with for the evening.
All right, we might as well. They're two biggies, so we'll do them both. So Microsoft also at support. So you can see kind of what's going to happen with these stock. A doji here too. Wow. I usually say this to our subscribers that when we have our Thursday night meetings, we do an extended Q&A on those, and it just seems like a lot of times on Thursday night, it's like Friday is going to be an interesting day and it's going to matter a lot. Well, now we're saying it on Tuesday night, because what happens tomorrow with all of these stocks with dojis, with all these stocks that support resistance, something significant is going to happen. So with Microsoft, if it holds 240 here, it's on a wave 3 to the downside. It could easily come down to that 220 level, easily. But it is oversold right now from the 10-day moving average. And so any bounce would have a lot of trouble at 260. So be careful of that. And that's also where the wave 4 forecast would be. So if it did bounce from here, that's where the wave 4 is saying this is where it would likely go to. So if we have a good market and we bounce higher, you're going to 260 easy. If it breaks below that, you're going to 220. So many of these stocks have great trades, just depending on which way they go. There is no reason to pick a direction on these stocks. Let them make their move and jump in. There's so much room on all these stocks to move, so many profitable trades. All right, on Amazon, and we take a look and see if it's going to follow suit here. So we've come down and filled the gap, so that was important, and we have a little gap here. There's an awful lot of support here at 120. This is also kind of in the area of where whether or not you drew it as a symmetrical triangle, or if you were more in the line of making it kind of a ascending triangle with the top at 120. We're down here testing 120. Can Amazon break 120? That would be shocking to me if we went below there. So we do have a zigzag to the downside. So the key is going to be what happens at 120. Can it hold 120? Look at that. The point of the triangle is exactly the 61.8% extension, which with a 38.2%, call it B wave correction, that's where it's supposed to go. So if it breaks that, it's coming to 110. So if we can't hold 120, you'll see 110. It'll try to hold this though, and bounce back to the upside. Again, it's done. It's completed this. So you may wonder when a zigzag completes, because I've talked about that a couple of times. There's been a couple of these zigzags that have completed, but do they have an extended C? Well, if it doesn't have an extended C wave, where does it go? It retraces the C wave extension. So if we hold here, then we're going to go back up to where this B was. So it'll go back 135 to 138, etc. So if we can hold 120, it's going to go back to 138. If it doesn't hold 120, then we're going to see 110 on Amazon. So much to be decided tomorrow. So we'll have a lot to talk about when we get together again next week. As you know, I sign off the same way every time. Thank you so much for spending your valuable time with us. Time is the most valuable asset we all have. We appreciate it very much, and we do our best to make your use of that time as informative and educational as possible. Thanks so much, everybody. Have a great rest of your week. Tomorrow's going to be wild. See what happens. Talk to you soon. Take care.